Welcome to Siili H1 result info. Today we go through the main relevant events of half of the year, and of course we go figures. My name is Tomi and I'm the CEO of Siili. And today I have me here, Aleksi, our CFO, and in a minute he will go figures in detail. Generic stuff. And if you have any questions, there's this box somewhere in the screen says ask a question or something like that. So if you have a question, so please put a question there and we will answer those after the presentation. And so before I go to the actual H1 stuff, just a brief info of Siili in case we have people online for whom the Siili is not familiar yet. So in one sentence, Siili is a growing and profitable pure-play digital delivery company. Our slogan is make it real, and that describes us actually pretty well. So we are a very delivery-oriented company, and we do what we promise. And that's in the very nature of Siili as a company and organization. Typically, we are called in when a customer has an ambitious vision and they need somebody to actually build that. And that's what we do, so to make it real. So briefly, the facts, the Siili basic facts. So we are a pan-European company. We operate in 8 countries. We have development centers in Poland, Hungary, and Finland, and then customer care sites in Central Europe as well as in US. And by the way, we opened a new office in New York earlier this year. The figures, now, like I said, we go through in more detail, of course, those later today, but we made roughly 59 million revenue on the first half of the year, and we have 942 Siilis, so our experts, that was the headcount number in the end of H1. As a business, we have 2 business concepts. So the innovation spearheads, which means in our case Supercharge and Siili Auto. Supercharge is focusing on digital innovations, and Siili Auto, as you can maybe guess on the name, that Siili Auto is focusing on developing software and concepts for cars. Then the other part of the business is our end-to-end offering business and services, and that means services from advisory to the managed services. So typically first we do the business design, of course together with the customer, then the UX, the user experience design, then we actually build the software, and then we test it, and then we operate it, so the managed services part. So that's our very much our core business. And depending on the customer request or need, we can do it in a way that we do the whole delivery service as a complete end-to-end solution. And then the other option is that in case customer wants to do it that way, that then we provide the team of professionals, and then the customer manages or leads by themselves the delivery management and the project management. And we are of course very flexible on the model, so we can do it in both ways depending on the customer request. A few words of our customers. First of all, we have very satisfied and diversified and loyal customer base. Typically, we work with the big and mid-size private sector companies, global brands such as Ford, Daimler, and Zalando, for instance, are our customers. Also, public sector. Of course, we work with the public sector as well, and that we see clearly as a very potential growth area for us as a business. It's not significant for us yet, but we have kind of hopes, and we believe that clearly is a growth potential area for us. More than 90% of our business is time and material based, which means, of course, from the investor perspective, that the risk level is rather low. But then, if I pick one customer case from the first half of this year, I would pick the Rimac Automobili case. So Rimac is a company which builds the Nevera supercar, which is the world's fastest production car. And by the way, the Formula 1 world champion Nico Rosberg is the first lucky owner of the first delivered Nevera. And we are the partner for Rimac to build the multi-screen infotainment system. So the cockpit experience is built by us, of course, together with Rimac. But that's I wouldn't say it's a typical case, but that kind of things we do, and we can do. I mean, obviously, it's just one example. Now then, moving on to the first half of the year. We had our Capital Markets Day in May, and then at that time, our message to you was that Siili is raising our ambition level for growth and profitability. We have a strong track record on profitable growth, and now also, as you can see from the figures, that also on H1 we have delivered accordingly. And the figures. So as said, the revenue of the first half was roughly 59 million euros, and that was 21% growth from the previous year. And actually, out of that growth, roughly 16% was organic growth, so very impressive figures. Our profitability, so the EBITDA was 6.4 million, and that grew even more, so 51% increase from the previous year. And our EBITDA percentage was 11%, and the comparable figure last year was 8.8%. So again, significant improvement there. And in the end of the first half, we had 942 Siilis on our payroll, and that was 14% more than previous year. Then a few so a few highlights of the first half of the year. First of all, we upgraded our long-term financial targets. I will show those in a minute. Then another thing, we did a directed share issue in June, and that was completed successfully. So we collected roughly 15 million euros capital from the market, and that was the reasoning for that was that we wanted to strengthen our balance sheet and, of course, prepare ourselves for M&A activities. We renewed a bit our leadership team. We had a very good performance, as of course you can see from the figures. We had a very good performance in different businesses around Siili. Very good success on acquiring new customers, as well also on the recruitment front. We were very successful. And also worth to mention that the attrition level this year has been clearly lower than last year, and we have put a lot of effort on the employee experience, and that's still the most important thing for us internally as a company. Of course, the customer. No, we have basically two things on our minds: the customer and then our employees, Siilis. And that's of course the plan to continue also on the second half. The business overall is looking good. Yes, of course there are uncertainties because of the global situation and the financial situation, inflation, threats, etc. But so far we haven't seen no implications to Siili. And we keep our eyes open on that, but so far the business looks good also when looking ahead. Right, so like I said, we raised our ambition level on growth and profitability, and we have updated our long-term financial targets accordingly. And our new growth target is 20% annual growth, and out of that 10% or half of that organic growth. And again, as you can see from the figures, that in H1 we are in a very good road towards our long-term targets. Now I will hand over to Aleksi, and he will go more detailed through our figures and finals. Thanks.
Thank you, Tomi. So let's take a look to Siili key financials after first half 2022. So our strong performance continued in both revenue growth and profitability, as Tomi already told. First half overall growth was plus 21% compared to last year and organically over 15%. Respectively, our last year organic growth at the end of first half was plus 1% at the end of first half, so a very good performance on that side. We can say that we are growing in all areas, both in Finland and internationally. The good top line development is visible in the profitability also, and first half ended with a great adjusted EBITDA of 11%. Underlying reasons for our result were good performance on sales, improving efficiency in our core business, and successful recruitment across the group. And as Tomi told, going forward, these will be the key areas for the rest of the year also. Let's take a look to the quarterly figures. The blue columns are showing the quarterly revenue starting from Q1 2019, and the last column is second quarter this year. And the black line is showing the quarterly EBITDA percentage for the same period. So during the second quarter, we continued our good quarterly track and actually achieved 14th consecutive quarter with profitability improvement compared to second quarter last year. Total growth rate for the second quarter was 17.4%, and that was completely organic growth. Overall sales for the group was 29.5 million euro. The EBITDA margin was very close to 10% of revenue and 2.9 million respectively. And it's worth mentioning, as you can see from the picture, that during the last 3 quarters, our EBITDA margin has stayed in line with our current financial target, profitability target of 10% adjusted EBITDA. Looking at the rolling 12 months development, the blue columns in the picture are showing the 12 months revenue, and the last column is rolling 12 months at the end of first half this year, and the black line respectively the EBITDA margin for the same period. So in revenue, we are currently on all-time high level of 109 million euro at the end of first half. Also, our EBITDA margin has consistently improved, and actually last 12 months EBITDA margin was 10.5% at the end of first half. Also this our all-time high 12 months trend result. Since 2018, our profitability has been improved by various actions concerning our sales and operational efficiency, but also with acquisitions. We have over doubled our EBITDA margin since 2018, while maintaining the annual growth rate of 15% between starting from 2016. All in all, we're well in line to meet our financial targets for this year in both growth and profitability. Growing international business has been a major contributor in our result. The growth track in the international business during first half 22 continued, and international revenue amounted to 14 million euro and almost 24% of the total group revenue. Significant share of our business is coming from outside Finland. From last year first half, the revenue actually nearly doubled, and of course Supercharge and Siili Auto are the main contributors here. The outlook for both businesses is good, and we are of course happy about the performance here. The picture is showing the rolling 12 months trend for the first half 22, and actually our international revenue is now 26 million euro on a 12-month basis and almost 25% share of the total group revenue. Few words about the recruitment and our headcount. So our headcount was in total over 940 at the end of first half, and we had a growth rate of plus 14% from first half last year. So we are getting closer to in total 1,000 employees across the group. The good growth was due to successful recruitment both in Finland and internationally. At the same time, our subcontractor network grew to actually 200 subcontractors calculated as FTE within the Siili network. So good news on that side as well. So thanks to our solid financial performance and also with the support from the directed share issue carried out in June, our financial position was strong at the end of first half. We have negative net debt EBITDA ratio, and actually equity ratio improved to over 40% at the end of first half. All in all, we have a good position to continue our inorganic growth track in the future now. Finally, our guidance for current year. We retain our guidance and expect the group revenue to be in the range of 102 to 117 million euro and adjusted EBITDA between 10 to 13 million euro. That was the key financials, and now Tomi.
Thank you. Right, so to summarize, so I said we continue to keep our eye on the ball, and on the second half of the year we will keep focusing on serving our clients and of course as well developing our employee experience. So those are the two key things for us. No surprises there, so those have been key things for us, and they will be the key things for us also on the second half of the year. Second point, we strengthened our balance sheet with this directed share issue, and of course the plan is to accelerate our growth with M&A, and we prepare for that with that share issue. And as said, we have updated and upgraded our long-term financial targets to reflect that higher growth and profitability ambition level. So that was it. And now time for questions and comments. And thank you. Right. So, do we have any questions? I understood that we have some questions.
Thank you. So we have a question from Jaakko Tyrväinen, SEB. And the question is, I understand that Siili Core is performing well currently. In our own analysis, what is driving this and how would you describe Core's growth compared to the current general digital services market growth? That was a question from Jaakko Tyrväinen.
Right. So, no, first of all, that in the past, we know, as all of you probably know, that we have had some issues with the core business earlier, but that's not the case anymore. So clearly, we have improved there, and we are very good track on improving still. No, I would say that the position at the moment is good. Of course, there's always room to improve. But then we haven't given the figures in terms of percentages of growth or anything like that. I mean, as a segments or as a parts of our business. So not probably do it here today either. No, then when it comes to that, what drives that? No, of course the market demand has been good, and well, I mean, we don't foresee any changes there. Yes, of course, like I said, that there are general uncertainties globally, but at least so far that hasn't reflected our demand on the market. And then the other side of the coin is, of course, the recruitment, and that, like I said, we have been successful there, and that has been, I mean, that has been the situation for the past 10 years, that how well you can manage to recruit new people and of course keep the people. So that has been practically the kind of driver for growth for the past 10 years, and the last quarter didn't make any change on that logic, and difficult to see any changes on that logic for the coming second half of the year. So was there a part of the question?
Yes, I think that was an answer for the growth. Then we have a question from Joni Grönqvist, Inderes. Number one is, can you say a few words about the different businesses, how the different businesses developed in Q2? Maybe you already answered that we don't disclose the different business figures, but maybe in general.
Yeah, no, in general, as you can see from the figures, that the business is doing well, and it doesn't kind of that. Yes, of course, there are some differences within the Siili, but in general, it's fair to say that the business is going well in all the business. The auto had challenges because of COVID, but we have overcome those, and that we saw already earlier this year, and that trend has continued. And Supercharge, we opened a new site in New York earlier this year, and also there I don't see any reason why the growth would slow down. And Vala is a kind of very let's say credible performer, has been that, and again I don't see any reason why it wouldn't continue. So, and the core, there, yes, we had issues, but we have overcome those, and core is now improving steadily.
Then there was other question from Joni Grönqvist. What was the main reason for the drop in profitability quarter to quarter? I suppose meaning compared to quarter one. Maybe I can answer this one. So second quarter, that includes already holidays, and in general, normally the profitability is affected by that period. So that's one of the items there. Anyway, improvement compared to last year, same period. Then Jaakko Tyrväinen, question about the pricing. One of your close peer indicated that their pricing is up 4%. What is your understanding of the current market rate development, and are you participating in the price hikes?
Yes, no, of course the inflation impacts us as everybody else. So there is clearly a trend to increase prices. No, that hasn't impacted. So our H1 is not based on price increases. So yes, we have done some price increases, but it hasn't played a significant or role in our figures on H1. However, we have prepared for that for the second half of the year. So I would assume that there will be price increases, and we are prepared to do that. And yes, of course it depends on the customer and the situation and etc. But in general, I guess that the kind of assumption also on the customer side of the table is that there will be price increases from us as well as from others. And we don't, of course we are kind of in that kind of topics, we kind of act as the market in general. And once again, the business is not that. Yes, of course the pricing plays a role, but it's much more, and that has been the case for a number of quarters and years already, that the demand overall, the demand is higher than the supply, and then that means that the customer in the end is after getting the right team. And yes, of course, there's always a price kind of discussion and negotiation, but it's not a price-driven business as a whole.
Thank you. Then again from Joni Grönqvist, Inderes, can you elaborate on the M&A market, how you see it currently?
Right. So no. As said, that we are prepared for the M&A activities because we strengthened our balance sheet, and was wanted to strengthen our balance sheet, but obviously the main reason for that was that to prepare for the M&A, and there has been activity on the market on that front, and now we are of course planning to be more active on that front, and now we are, let's say, scouting the market to find the good fit with us in terms of the culture and other aspects. So we are kind of activating ourselves on that, and clearly there's some general activity on the market.
Yes, then maybe I bundle up a few questions from Jaakko Tyrväinen, Seb, and Joni Grönqvist about the employee market. So your number of employees is up by 14% compared to last year. Are you comfortable with this when looking at your second half order pipeline? Is this appropriate level, or do you need to continue net recruitment? Then continuing with that, how do you see the overall employment market currently in your main markets? Access to employees, salary inflation, attrition.
All right, thanks. Oh no, I start to repeat myself that the past 10 years that has been the name of the game, that we are competing on the talent, and the last quarter didn't change that situation, and the next quarter or the next half year won't change the situation. And we have improving. I mean that our attractiveness as employer has clearly improved, and we've been I would say very successful in recruiting, and also like I said, our attrition rate is clearly lower this year than what it was last year. So our, let's say that our position, I would say relative position compared to the market is and has improved already, and don't see any reason why we couldn't still improve. But then what that means in figures, no, I don't know exact figures, but we know, like I said, we have a very good track record on recruiting, and we are of course strengthening our recruit team as well to make sure that we can continue recruiting in a higher growth rate.
Then maybe about the overall employment market currently in our main markets. What can you say about that?
Yeah, no, of course the inflation, obviously sooner or later it will have impact on the salaries, but then that in this kind of business, of course, we have to be able to reflect, and you can see that also on the peers figures, that we have to be able to reflect that if our salaries increase, then obviously we have to be able to reflect that on customer prices. And I don't doubt that that the customer understands this simply because of the general market situation. And yes, of course, there are some delays on particular customer cases, but in general, I'm not concerned about that. That in this kind of business, it's the only way that this business can kind of work, and the market knows that. And when it comes to the actual kind of figures and numbers, yes, there are variations in different market. No, it's fair to say that in Hungary, where we have one of our development centers, that there the inflation. It's no news that the inflation there is higher than in Finland or in EU. But then on the other hand, they have a different currency, and then they use the currency card, kind of making sure that their capability to compete in a global competition stays on the same level, and that's clearly nothing to do with us as a company. It's their, obviously, they have a national interest to do so.
Then final question about the employee side from Jaakko Tyrväinen, Seb. What have you done differently to improve attrition and employee experience this year?
Yeah, no, good question. I cannot say that there's this one kind of magic thing that, hey, we did this and problem solved. That obviously it doesn't go like that. And of course we need to improve continuously. Now, clearly one of our kind of thing is the career development and the competence that we have that we systematically build kind of opportunities for our employees that they can further develop their skills. So meaning the learning possibilities and the career opportunities as well. So those are maybe, if I would need to mention a few things, I would mention those. But in general, it's a kind of long list of small things. It's clearly a continuous improvement thing. It's not a kind of that, hey, let's change this. And no, anyway, maybe was it a good answer? But it's a long list of small things.
Like in many cases, there is not one clear action. You have to do many things. Then question from Franz Mikael Roosted. How do you see the US market, and how will you manage to be successful in the USA when many of your peers have failed to succeed there?
All right. No, it's no. Yes, we opened the site for supercharts, but it's not a new thing for us. We've been. I mean, Siili Auto has been there. Probably no better than we that how long, but years anyway. And we've been successful in US. Ford is a big customer for us. I mean, the Ford in US is a big customer for us and has been that for years. Supercharts has already number of customers in the US, and that's so we didn't kind of go there and open a new site. I mean that, hey, let's go and invade US. That's not the thing. It was that we had already their customers and we want to serve our customers better. So in that sense, the risk level is of course lower, and how we are competing there. No, it's the same as everywhere else, that it's all about the skills, that we have very high level of skill set, and that's what the customer is after. And in US, of course, the additional factor there is that we obviously utilize the cost difference that we do practically, not all the work, but almost all the work that we sell in US, we do it either in Poland or in Hungary, and then of course utilize the cost difference of these countries. So those are the factors how we compete.
That was the last question we had.
All right, very good. Actually, very good questions. So thank you for those. All right, so that's it for today, and we will come back to you then after the third quarter of this year, and hopefully we will have some news already before that. Thank you.